Hey everybody, I'm Timmy Reed Jr. with Reed Sprayfoam. And with all the craziness going on with the coronavirus and things, and myself as a father, a small business owner, and growing up in a household where my parents were small business owners, I really understand the crunch, the pinch that a lot of people are feeling out here, the uncertainty. There's a lot of confusion going on, and just seems like everywhere you turn there's a lot of different information, and not really understanding what to do or where to turn. And here at Reed Sprayfoam, as the CFO, one of my primary jobs and responsibility is trying to navigate this situation for our business and our customers. And so I'd like to take a few minutes to share some information that we hope that you all will find helpful as small business owners. And there is just so much new information. It seems like it changes every day, even preparing for this new guidance that's coming out. So we want to take some time and go over some popular options that are out there for the small business owner. First thing we want to talk about is unemployment insurance. And for the first time, self-employed people all across the nation can now apply and qualify for unemployment. These are your restaurant owners, your hairstylists, handymen, online retail owners, and even gig workers such as Uber drivers, Lyft drivers, and many more. These are individuals that have been impacted by the COVID-19 and are unable to work or have a reduction in income, and that now qualify for unemployment insurance. Traditionally, unemployment benefits, there's small amount of payments, and they typically range from $200 to $500 a week, depending upon your state. Could be a little more, could be a little less. And the federal government, as part of the CARES Act, is supplementing those payments with an additional $600. What that means is, for example, if you apply for unemployment and you would typically benefit for $400 a week, you will receive those benefits plus an additional $600 a week for a total of $1,000 a week in unemployment benefits. Because of the speed that this act had to be passed, Congress decided to supplement these payments in order to try to reduce the burden on individuals who have been laid off due to this, and try to maintain their income as best as possible. So this results in certain areas where maybe some individuals may be receiving a little extra during unemployment, and some others may not, depending again upon your state. To apply for these benefits, you do have to apply with your local unemployment office in the state that you reside. And because this is a state program, people's interactions and experiences are going to be different. Whether you're in California, Kentucky, New York, your experiences are going to be different. And the states are having a difficulty navigating this process. We'll just be honest. This is a big undertaking on their part. Experiences are going to vary greatly. We've heard a lot of stories and things from people who have been trying to go through this process. And essentially what is happening is a lot of self-employed individuals are being denied initially. And that is because the computer programs are not updated and set up to approve applications. So you still want to apply, even though you may initially get denied. In a lot of states, they are going back and having a person review these cases and then approving those claims for self-employed individuals. It may take additional time, but what they will do is they will back up and pay those benefits during those periods. So definitely make sure that you apply. Don't get discouraged. Don't give up. Don't let somebody else's experience deter you from applying for yourself. And I know, even if you have employees that you have laid off, be sure to encourage them as well. The sooner that you apply, the sooner your application can be processed and approved. I also just kind of want to mention something that I've seen. I attended a webinar with Josh Benton, who is the Deputy Secretary of the Kentucky Education and Workforce Development Cabinet, and I believe he brought across two very important points that we should remember as small business owners. One is employers should work with employees to make accommodations for those who have concerns such as compromised immune systems or underlying health issues during this coronavirus, the COVID-19 time here. And so if you have an employee that maybe they have a compromised immune system, or they have a family member that does, and they're concerned about coming into work, if you're an essential business that is still operating, try to make accommodations. If it's a job that they can work from home, allow them to work from home. We should, as employers, extend some flexibility to our employees. And another thing that he brought up is that in Kentucky, that losing the job at no fault of your own is a determining factor in if you receive unemployment or not. And that factor is not being weighed. So I know some people have been concerned about, will people just quit in order to get on unemployment? So somebody can't just quit to get unemployment, and employers still have protest rights. But I want to reiterate what he brought forth in that webinar, and that is to try to work with your employees during this time. Now we're going to get into some of the federal programs that are out there available, and the first one we're going to look at is the Economic Impact Disaster Loans, or another term is the EIDL loans. And these loans, they're traditionally used for businesses that are maybe in an area that has been impacted by natural disasters such as flooding, hurricanes, but these loans can now be used for businesses that have been negatively affected by the COVID-19 outbreak. These are low interest loans. They're around 3.75% loans, and they can have terms up to 30 years to repay these. And as part of this, they do have an EIDL advance. So a business can receive up to a $10,000 advance on their EIDL loans. These loans are taking a long time to be processed. These are actually administered by the Small Business Administration, the SBA. So they are just overwhelmed with the request for these loans. And the advance was designed to try to get money to the small business in a quick time frame. From our experience and talking to other small business owners, I personally don't know anybody that has actually received their EIDL loan. That doesn't mean that they're not being given. I actually spoke to a person with the SBA last week, checking on the status of a loan application that we've actually filed. And she said that she did actually talk to somebody who received their EIDL loan. And so the advance is, like I mentioned, is up to $10,000. And how they determine that is you can receive $1,000 for each employee you have, up to $10,000. So if you are a small business with 5 employees, you can receive $5,000. If you have 15 employees, you would reach the $10,000 maximum. If you are a self-employed individual, you can be counted as an employee. So if it's just yourself, you're a Schedule C business, then you would receive a $1,000 advance. Again, these are administered through the SBA, so you need to go to the SBA's website, and they have a link for the disaster loan applications. And they have changed this considerably since a lot of people were able to file. They have tried to streamline this process. I will give them credit for that. The current application, I believe, is 3 to 4 pages, and one of those pages is clicking the box for your EIDL advance. Now, this advance is a grant. It does not have to be repaid. So if you apply and you do not qualify for an EIDL loan, you can still receive this grant and not have to pay it back after the application process. If you apply for these loans, you do not have to take them. Once you get your terms, you can at that point decide if you want to take the loan or you do not want to take it. Now, if you apply for an EIDL loan, it does not exclude you from being able to apply for other loans. However, there are some mechanisms there to where you might have to refinance an EIDL loan into a payroll protection program loan, which we'll be talking about that here shortly. Then also your advance, that can also affect your payroll protection program loan as well, basically just kind of reducing what's allowed under each program. So if you receive $3,000 under the EIDL advance, that could reduce your payroll protection plan by $3,000 as well. So who is eligible for these loans? And that is basically every small business owner, including sole proprietors such as bed and breakfast owners, hairstylists, etc., has been impacted by the COVID-19. The SBA does have some restrictions on the type of business. So if you operate a gambling industry, or there's some other industries that maybe we won't go into into depth what type of business. They're adult-oriented businesses that do not qualify. So, but as long as you meet the qualifications and things, and those are part of the application process and pretty defined, and you check the box there. So you'll know whether or not you meet those qualifications during that application process. Please understand, that these programs are in place to help the small business owners get through these tough times. So definitely look into them, apply for them. To help you manage these uncertain times. Finally, we have the Payroll Protection Program. So the Payroll Protection Program, or the PPP loan program, is based upon an employer's payroll. So if you're a small business that has quite a few employees, or your payroll is a big portion of your operating expenses, this is a great loan program for you. And essentially, the program is designed to help employers keep employees working and on the payrolls and off of unemployment. And any small business that meets the SBA's qualifications to receive loans that has employees would qualify for these loans. How these loans are determined, it's based upon your monthly average payroll. So each business, your loan's going to be different because of your payroll. So you will calculate your payroll cost, and this will include wages paid to employees, any commissions, tips, compensation of that manner. It can include sick leave, vacation leave, family leave. Also includes group health insurance premiums. Is another portion of that expense. Retirement benefits as well. You do have to make some subtractions, such as if you have an employee that makes over $100,000 a year, then that portion does not count. So, for example, if you have somebody that earns $2,000 a week, that's $104,000 a year. So that portion, just to use round numbers, for example, above $1,900 would not qualify. So as long as their annual salary is below the $100,000 mark. So for that employee that made $104,000, you would have to reduce his by $4,000 for $100,000 even. Also, what is not included is the employer's portion of federal payroll taxes, such as your FICA taxes, Social Security, Medicare, railroad retirement benefits would not be included, and then any sick leave or family medical leave that you are receiving a credit under the Families First Coronavirus Response Act would not be included as well. So that's a different program. I know we don't talk about that one a lot. It's probably one of the first programs. If you're paying an employee sick leave to take care of either a family member that has coronavirus or they have been off sick because of the coronavirus, you can receive a credit for the wages paid to that employee on your payroll taxes. So if you're taking advantage of that program and you paid somebody a week or 2 weeks paid sick leave, then you cannot claim those wages as part of the PPP program. Most people will probably use their 2019 payroll taxes to calculate these expenses. You can use different periods. You typically will use a 12-month period. If you are a seasonal employer, there's some further guidance on what time frames that you can use for that to calculate how much your loan would be. So most businesses are going to use the 2019 payroll, whether through your quarterlies or if you've filled out your tax papers for the 2019 tax year. For example, we'll use if you have $240,000 in eligible payroll after any exclusions have been subtracted out or any additional items have been added in, you would divide that amount by 12. So $240,000 divided by 12 would be an average monthly payroll of $20,000. And then we take that amount and multiply it by 2.5. So $20,000 times 2.5, that is a total of $50,000. So in a sense, they're giving you 2.5 months of your average payroll. And as I mentioned earlier, there is continually new guidance given out. And just even here recently, there was new guidance given for self-employed individuals that I feel is very helpful. So to calculate the amount of your loan, if you are a self-employed individual, you file your taxes on a Schedule C form as part of your as part of your federal tax filing, you can complete your Schedule C for 2019. If you've not done your taxes yet, you will still need to fill out this form and submit it as part of your loan application. So you complete your Schedule C for 2019, and on line 31, that is your profit and loss line. So whatever your profit is, if it's $50,000, for example, you would use that amount to calculate your loan. Now, if your line 31 exceeds $100,000, then you will need to reduce it. So again, let's use that $104,000 figure again. You would need to reduce that by $4,000 for $100,000 even, and then you will divide that number by 12 and then multiply again by the 2.5 month period to receive the amount of what your loan would be. After you calculate this, you apply for this loan through a bank. This program is not being administered directly by the SBA, but you are going through SBA lenders. So these can be your large national banks. It can be smaller regional and community banks. I recommend using a smaller community-based bank that is an SBA lender. Typically these are your FDIC insured banks. So find one that does SBA loans. Hopefully it's a bank that you have a working relationship with. So for example, in our area, there is a one regional community bank that is a very large SBA lender. They're one of the top SBA lenders in the state of Kentucky. They have been doing a great job administering these loans. These loans are receiving pretty quick turnaround, averaging from as quickly as 2 to 3 days and even up to a week. So in comparison to the EIDL loans, I applied for one about 3 weeks ago, and they have not even processed my application yet as of 3 days ago when I called to check on the status. For your community banks, they have been more streamlined and able to process these loans a lot faster than your large nationwide banks. They seem to have a little bit of an issue, and I believe it's just where they're so large and trying to roll out the program nationwide versus a community bank that may have a few branches. Definitely check in with your community banks, banks that you have working relationships with, and apply for these loans. A few features of this loan is that you do not have to make a payment on the loan for 6 months. Your first 6 months there are no payments, and then after that your payments will be set up on terms that will have them paid off over the remaining months. So for example, if you have a 2-year term on your loan, these loans will vary depending on the size and the bank. I believe they can have up to a 10-year repayment window. From what I've been seeing and hearing, most of these loans have been over a 2-year period. So if you have a 2-year term on this loan, that loan is going to be paid back over 18 months. And then also, another feature of this loan is that if you use these funds in accordance to the guidelines of the program, this loan will be forgiven and it will become a grant. The main guidelines of this is that of the loan amount, 75% has to be used towards payroll. And again, those eligible expenses of payroll, such as wages, commissions, tips, and then can be sick leave, things like that, medical insurance, etc. Those allowed expenses when you was figuring up your monthly payroll, those would be allowed. The remaining 25% can be used for overhead items such as utilities, rent, and the interest on a mortgage if you're a business that owns your location instead of renting. Now, you can use more than 75% towards wages. You can use the entire 100%. It's just currently right now you cannot use more than 25% towards these other expenses. If you do, it affects the portion that will be forgiven. There's not too much guidance on the application process yet for the forgiveness, but I expect we'll probably see more of that probably here towards the end of May, 1st of June, as we're entering that 8-week period for a lot of companies that have received their loans. Because you have 8 weeks from from the date that your loan is approved and closed on to spend these funds to receive the forgiveness. So you will need to document how you use these funds, so keep that in mind. Be sure you document. I recommend a great practice of if you have a payroll account, have the funds deposited into your payroll account so it's not in your general funds and you don't use it for other expenses that doesn't receive forgiveness. It kind of makes it a little easier way with all the craziness and how hectic everything is to have that money put away, out of sight, out of mind, and that way you know it's going more towards those payroll expenses and things in order to for you to receive as much debt loan forgiveness as you can. Another great thing is this loan forgiveness does not count as taxable income per the Act. So a lot of times if you have a loan forgiven, you have to include that as part of your taxable income. But under this program, any amount forgiven currently, as it's stated through the program, is not taxable on your tax returns when you do your 2020 taxes. But I cannot stress enough to make sure that you follow the guidelines of the program. And again, if you have an employee making over $100,000 annually, that portion of their weekly or however often you pay, that portion of their payroll will not qualify for the forgiveness. Also, this program is designed to have you maintain your payrolls. So if you do lay off individuals, that does affect the amount of forgiveness you have. There is a formula for that, and again, that will be part of the loan forgiveness aspect. So be sure to try to maintain as many employees as you can. And if you do have to do some temporary layoffs, it's important to hire back by June the 30th and things that they go by a head count. And as well as you want to make sure that no employees' wages are cut by more than 25%. Hopefully you don't have to cut anybody's wages. That does happen from time to time. It's happened in other recessions, but try to maintain those payrolls the best you can. Another aspect here, you can receive an EIDL loan and a PPP loan. As I mentioned before, you can receive both. Both cannot be used for the same purposes. So an EIDL loan cannot be used for payroll if you've received the PPP loan. An EIDL can be working capital, taking care of buying materials, depending on the type of business that you have. A couple notes is I do want you to pay attention to the terms of the loan. Again, what is your payback period? If a portion of this loan is not forgiven, what time span do I have to pay this back? That's important. I don't want anybody caught off guard. Pay attention to your interest rate. These loans have a max interest rate of 4%. From what I've been reading and seeing, that a lot of these loans are coming out with 1% interest, which is an extremely low interest rate. But as I mentioned before, if you have a 2-year term, 1% interest, that interest starts from day one. So any portion, if you took out a $50,000 loan and $25,000 qualified for forgiveness and you had to repay back 25% or $25,000, that $25,000 is accruing interest from day one. And then the bank at your 6-month mark, they will send you a calculation. For example, our bank, they will send you a monthly statement, and that $25,000 plus interest is going to be divided up to pay off over that 18-month period. So pay attention to that. Now, this is a very critical step. In order to receive forgiveness, you have to ask for it. I can't say that enough. Again, in order to receive forgiveness, you have to ask for it. It's kind of like you make somebody mad, you want them to forgive you. Sometimes you have to go ask for it. So in this case, you have to ask for it. It's not the lender's responsibility for you to ask for it. It's not the government's responsibility for you to ask for it. It's not your mama's responsibility for you to go ask for forgiveness. It is your responsibility. What I've done is I have me a reminder set for here in like 2 months to apply. Actually, I've got it set for earlier than that, but to start checking in on is there an application, the process, the steps of getting forgiveness, and sending my documentation in for this debt forgiveness. Don't wait till the last minute to gather this information or apply for it. Going into it that it's part of it. So be prepared. Being prepared now is going to save you a lot of time, a lot of frustration, a lot of headaches on the back end. I believe if we get into May, 1st of June, we're going to see a lot more information. Perhaps we can do another video at that point, kind of walking you through that process of the forgiveness aspect of it. Again, the 3 programs available. We have the unemployment program, the EIDL program, and the PPP program out there available. And finally, I just want to make a mention, to always make wise and informed decisions. Don't act out of fear or take knee-jerk reactions. I believe this is important not just in making financial decisions for your business, but also for your personal finances, for your family. It's very important. Again, I'm a father of three, and things, and I always want to make sure that they're taken care of. So I would suggest make informed decisions. Reach out, get some help, ask a professional for some insight. In regards to your personal finances, I know a lot of the stimulus payments have gone out this week. Use them wisely. Make sure you're taking care of your four walls. What are those? That is food, utilities, shelter, and transportation. Make sure those items are taken care of. Those are necessities. If you live in a large city and you have a lot of public transportation options available, make sure you have money that you're able to get to work. In a rural area like where I'm from, make sure that you're putting gas in the tank and things. So take care of those items. I also want to mention a lot of mortgage holders, lenders are offering forbearance to individuals and things. Forbearance is not forgiveness. The word forbearance, it means patience. So the lender is being patient with you. And a lot of times they'll offer 2 to 3 months forbearance. And what that means is you don't have to make a payment for that 2 to 3 month period. But when that period is over, they expect you to make that 3-month payment. So if you have a mortgage of $1,000 a month and you go 3 months without making it, well, at the end of it, they expect your current monthly payment, which is $1,000, plus the previous 3 months. So they're expecting you to make a $4,000 payment. If you're able to make your mortgage payment, make it. Don't just not make it and be reckless with your finances. So I want to add that. This is a critical time, not just for the small businesses, but also for those individuals that may be watching this as well in your personal finances. All right, so I know we covered a lot of information, and everybody's situation is different. So please consult an attorney, a tax professional to determine what is right for you. Also, there's a lot of news articles about are these programs going to be running out of money. I know the president and the head of the Treasury, Steve Mnuchin, have come out and said that they are working to add more funds. So don't be discouraged. I recommend even going on applying, so that way as more funds are made available, you will already be in the system ready to receive those funds. So a couple of things to ask yourself. What option fits you the best? Are you a sole proprietor? Do you want to consider unemployment benefits in addition to a EIDL loan or a PPP loan? The EIDL grant. This is not a one-size-fits-all presentation. It's a lot of general information. So find out what works best for you. I hope this video clears up a lot of questions that you may have had as you try to navigate these processes and programs. Feel free to like our page. Please like and share this video. If you have any questions, please comment down below with any questions that you have. We'll take a look at those and do a follow-up video trying to answer those questions for you. Again, always feel free to reach out to us in any way that we can to help you. We want to make sure that we serve the communities that we work in, and more than just when we're working on somebody's home, but try to help everybody out. I want to thank you for taking your time to watch this video, and on behalf of the Reed network of businesses and the 50 team members and their families, I want to remind everybody that that the small business owner and those the employees, the team members of those small businesses, we are the backbone of this country. And please remember your local businesses, as you go out and do your shopping, and maybe when we return to some sort of normalcy, remember those your local small businesses that are there for your neighborhoods, and they help support your schools and your ball teams. Remember them, and I hope everybody stays safe. We'll get through this together. And again, take care and God bless.